Hi, Tyler and Mia. Uh, my name, as you know, is Dennis Clark. Sorry Erica and Randall couldn't be here. It's just going to be me and you today. This represents, of course, the culmination of the financial plan we prepared. Yeah, I know it looks thick. I think it's 67 pages long. Let's see, I've got it here so we can look at it together. And I was hoping to take you through it as much as anyone can in a little over half an hour. Uh, and of course, I want to congratulate you on taking the first steps in securing your financial future. This is an important first step. And I think what you'll notice in looking at this that I'm not telling you to adopt a rich uncle or get another job. I'm telling you basically to utilize the resources that you currently have, and that's what we do. We look at what you've got coming in, what you have currently, and how you're utilizing your resources, and we attempt to maximize the how you're using them to their best effect. And that's what we're doing with this entire plan. Now you'll notice with this first page two, this is just the cover letter. We go through it so that you don't have to go through the entire plan to find these things. We basically culminate it in just a couple pages, so you can see what we're recommending right off the bat without having to go into the detail. Unless if you want to see the detail, because the detail's there. Now, this plan, it represents a very specific moment in time, especially with regards to the assumptions. The assumptions are as of today. That doesn't mean that they're going to be the same a year from now or 20 years from now when you plan to retire. So we need to look at this every once in a while to make sure that we're on track. Also, things can happen in your life, as they inevitably do. Mr. Murphy still rules all the law, and things don't inevitably go as planned, and so we're going to need to look at these things um, on a regular basis to be sure. We'll talk. You'll definitely remember me every year, and hopefully when you come in, we'll be able to look at your current situation and see that anything's changed and modify the financial plan accordingly. So this cover letter, as I've said, it summarizes everything. Now we'll go through it afterwards, after we go through the detail, and then I'll show you everything in the cover letter will be familiar after we've gone through the detail of the financial plan. Now on page, let's scroll down here through it, you'll see in this first section on page 7, of course, we've got the introduction. Everything's got an introduction, but you see that we've got specific plan assumptions here. These things are generally economic assumptions. Your specific tax factors, specifically, we've assumed that until retirement you're going to be in a 30% combined federal and state tax maximum marginal rate. And also, once you retire, you're not going to have as much income coming in. It will likely bump you down tax brackets, and so we're assuming a combined rate, federal state rate of 25%. I'm specifically highlighting that as an important one, as all of these are important. You'll see a table on page 8 going through all of our rates of returns on the various investment choices that you have available to you. And we've got various market index assumptions and the cash money market yields as well. This is only one moment in time, obviously. So it just further reinforces the fact that we need to look at this periodically, and of course I'm advocating annually. It's just a nice round number to update these things and make sure that we're still on track. Interest rates right now are very low, and as we get into the future, interest rates will probably go up. That's what they're expecting to do. So your rates of return may actually go up. So if that's the case, then maybe we can accelerate some of your financial plan conclusions. So let's see. First section in here is the expense management section. Now, you've done an excellent job in general. We looked at various ratios of your expenses, your income, your debt to one another, and they look very good. Of course, there is some massaging, and the massaging is what we do, but generally, you're doing a pretty good job. Now, we do have a few points on some of the expenses. It looks like if you go to page 9, that's where we start on the expense management section. Now, in order to achieve your goals, we do suggest that you reduce some of your expenses. As you see here on the table on page 9, oh, excuse me, that it runs over onto page 10. You see that we are suggesting some cuts. Now, they're not cuts to the quick, meaning that we still feel, as I hope you will as well, that this is livable. But we do need some additional cash, positive cash flow in order to fund some of the other things and some of the other sections that we'd like to accomplish. So these are the expenses that we're suggesting. They're modest, to be sure, but if you have any issues with them, once you've tried them out, because of course, as I'll tell you later, only you're going to be able to tell whether these things are even really something that, now we think that you can live within, obviously, but we put it in the plan, but that there's something that you can live with on a permanent basis, or at least until retirement. A good example of something that you can cut, the bank fees. There's while you've, I mean, these types of fees. There is an answer to reducing bank fees because there's a lot of free checking out there, and as long as you can do certain strategies, you don't have to incur the fees that are incurred sometimes. Mostly they're fees of convenience. And if you just go out of your way a bit and find the free products that banks tend to offer, you can reduce things like that. So, in reducing expenses, it's really looking for the alternatives, because in those alternatives, I think you'll find sometimes that you can reduce your expenses. I'm not telling you something you don't already know, I'm sure, but this is, let's just say, a wake-up call that these things can be reduced and should be reduced, especially in the way that we're suggesting here. Again, if you have a different suggestion that comes to the same conclusion in terms of savings, we definitely should explore that, because you ultimately are the one that's going to have to live with this.